The Silicon Valley housing market is at a turning point. Prices are holding steady, but more homes are sitting unsold and buyers are hesitating. Is this a slowdown, a shift towards the buyer's market, or just a pause, a minor adjustment like we experienced back in 2019 or 2023? Economic uncertainty is uplifting the inventory surge, and many sellers, flush with equity, are testing the market without any urgency. Stick with me for this July 2025 update for San Mateo and Santa Clara Counties housing market, and I'll unpack the data, explain what's driving these mixed signals, and share tailored advice for buyers and sellers. Watch until the end for the full picture and actionable steps to make your move. Let's start with the data, giving us a clear snapshot of what's happening in Silicon Valley this July. Here in Santa Clara and San Mateo counties, the median home sale price was $1,631,000. That was up less than 1% from last year, showing prices are holding firm overall, but it's down by 5.4% from June. This month-over-month drop suggests a softening in buyers' demand, though it's tough to separate this decline from seasonal trends without more data. Median list price, on the other hand, was up 2% from June, reaching $1,550,000. Sellers are asking for more, but the gap between the list and sale prices shows buyers aren't matching those expectations. 2,056 homes were listed in July, a 9.5% increase from last year. More sellers are entering the market, boosting supply to pre-pandemic levels. At the same time, the number of sold homes went down to 1,460, a nearly 5% decrease from last year. Fewer deals are closing, reflecting buyers' caution in the face of record-high home prices and job market uncertainty. Average time on the market grew to 26 days, a 37% jump from 19 days last year. Homes are taking longer to sell, giving buyers more time to decide and removing a sense of urgency to act. The inventory remained at 2.1 months in July, same as in June, and a 31% increase from the same time of last year. The total number of homes available for sale increased to 3,133 at the end of the month in our two counties. We're back to the inventory levels we experienced in 2018 and early 2019, the last normal times before the onset of the pandemic. These numbers paint a picture of market with growing supply but slower demand, creating opportunities and challenges for both buyers and sellers. The primary drive behind this slowdown is economic uncertainty, and it's hitting from multiple angles. First, job numbers for the last 2 months were revised downward, shaking confidence in the employment landscape. In a region like Silicon Valley, where tech jobs drive so much of the economy, this uncertainty makes buyers think twice before committing to a big purchase. Second, mortgage interest rates remain high with no relief in sight. The Federal Reserve has kept the prime rate steady at a higher level for the past 6 months, trying to get inflation under the target 2% benchmark. Add to that the looming threat of tariffs and broader economic uncertainty in the new global trading environment, and you've got a perfect storm of caution and desperation. Buyers are holding back, waiting for clear signals about where the economy is heading. This isn't just a local phenomenon. National reports, like those from the National Association of Realtors, show similar trends in high-cost markets with economic factors heavily influenced by buyer behavior. In Silicon Valley, where affordability is already stretched, these pressures are amplified. Sellers are still listing homes, hoping to capitalize on the region's reputation for high prices, but buyers are more selective, leading to fewer sales and longer market times. Here is the twist that defines July 2025 market. Inventory is up significantly, with 3,133 homes for sale, a 25% increase from last year, driven by 2,056 new listings and longer market times, 26 days on average. This should favor buyers, offering more choices and less pressure to bid quickly. But there is a catch. Many sellers are in strong financial position, having built substantial equity over years of Silicon Valley's booming market. On top of that, many homeowners locked in low interest rates during 2021 refinancing binge, making their current mortgages incredibly attractive to keep. This gives them a unique advantage. They are not desperate to sell. Many are testing the market, listing homes to see if they can get their desired price, but they are ready to pull their properties off the market if offers don't meet their expectations. The 2% month-over-month increase in median list price, reaching $1,550,000, despite a 5.4% drop in sales price, highlights this disconnect. Sellers are holding firm, expecting top dollar, while buyers are more cautious. This tension, more homes for sale, but unmotivated sellers and very cautious buyers, is the key to understanding today's market. Sellers in San Mateo and Santa Clara counties are still in a very strong position, but the market slowdown requires careful strategy. Here is how to make the most of your financial advantage. Price realistically. With homes taking 26 days to sell, 37% longer than last year, overpricing risks your home sitting unsold. Your equity gives you flexibility, and pricing it right will attract serious buyers and produce faster sales. Highlight your home value. With more than 3,000 homes on the market, yours need to stand out. Professional staging, high-quality photos, 3D models, videos, and virtual tours to showcase your home are necessary to boost the interest in your home and to attract demanding Silicon Valley buyers. Then use your leverage. Your strong equity and low 2021 mortgage rates mean you don't have to sell. If offers don't meet your expectations, you can afford to wait. But being open to minor concessions can close deals without sacrificing much. Time your listing. With a 9.5% increase in new listings, competition is up. Work with a realtor to list when buyer demand is at its highest. In the Bay Area, typically we have two selling seasons. The spring selling season starts as early as February and lasts till end of May. The fall season is almost here now. It starts right after Labor Day and lasts till about Thanksgiving. Your financial strength means you can hold out for the right offer, but smart pricing and marketing can get you there faster. Buyers, now is your moment to take advantage of a market tilting in your favor. Here is how to navigate it. Shop selectively. With more homes for sale, you have more options than in recent years. Focus on homes lingering near or past the average days on market, as these sellers may be more open to negotiation, especially those who are motivated to sell. Negotiate smartly. The days on market data and the gap between the list price and the sale price show that the sellers are more open to negotiation. You have more leverage now, so don't be afraid to ask for concessions, whether it's a lower price, a credit for repairs, or other favorable terms. Secure financing early. High mortgage rates are a challenge, so get pre-approved early to strengthen your offer and avoid delays. This is especially critical in market where sellers can afford to be picky. Always think long-term value. Silicon Valley's fundamentals, tech hub, limited land, high demand remain strong. Buying now with more inventory and less competition could position you for future gains as the market picks up again. You have more leverage than in recent years, but decisive action is key when you find the right home. Bottom line, the Silicon Valley real estate market in July of 2025 is adjusting, not collapsing, similar to what we experienced back in 2019. Economic uncertainty, weak job numbers, high interest rates, and international trade concerns is slowing buyers' activity, leading to fewer sales, down 5% year over year, and longer market times, up to 26 days on average. Meanwhile, A 25% surge in inventory gives buyers more choices, but sellers, bolstered by strong equity and historically low rates on their existing mortgages, aren't desperate to sell. Many are testing the market, ready to walk away if prices don't meet their expectations. This creates a standoff. Buyers' negotiating power is growing, but sellers can't afford to wait. Success comes from understanding this dynamic. Sellers should price and market strategically to stand out, while buyers can shop carefully and negotiate for value. The market is in transition, offering opportunities for those who act wisely. Navigating this unique market, where sellers hold strong but buyers have options, requires expert guidance. Whether you are selling and want to maximize your equity, or buying and seeking the best deal, I'm here to help with personalized strategies. Schedule a complimentary consultation today. My contact information is in the description of this video. Let's turn these market insights into your real estate success.